How's it going, subscribers? Today we're going to be talking about Disney, DIS, the Disney stock and the company, and whether it's a buy or not. So let's go over this company together. So when we look at Disney, we can see in the short term it's been falling in the past day, fell down about 1.62%. Now when we look at the week we could see actually that Disney spiked up.
Have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
Let me tell you about my day so far. Coffee in Paris, surfed the Maldives, took a little nap on Mount Kilimanjaro. Oh yeah, and I got digits from this Polish chick in Rio. NBA Finals. And all that was before lunch.
I have more than $100 million. Subscribe to my channel so I can teach you how to make millions.
10%. 10.43%. So what happened over here? What made Disney spike up 10.43%? Well, it turns out that actually Disney's releasing a streaming service where they'll stream. It'll be like a Netflix, but a Disney version where you could stream all the Disney flicks that you want. Now, this is pretty cool. I mean, imagine all the content that Disney has. Just think about Disney and all the movies Disney has made. I mean, Pirates of the Caribbean and so many. Disney just owns so much product, you know. So Disney has a lot of classics. Lion King, Aladdin. Disney has all that stuff. So this 10% is because of the streaming service that Disney has been the media has been actually making a fuss about. Now, when we look at the past month, Disney has been going up 15%. When you look at the 3 months, 16.64%. We look at the 1 year, it's up 28.46%. But now, subscribers, check this out, subscribers. Now, when you look at during December 21st, there was a huge decline in the market. So right now we're in a bull run right now, essentially. So now look at how low Disney went when it was when we were in a down market in December 21st, or around December 21st, right here. So December 24th, it was down only down not even 1%, but if it falls back down to where it was in December 21st, which was only 4 months ago, then we would be looking at a 30% decline. So keep that in mind, guys. Now, when we look at the 5-year chart, we can actually see that every time Disney spiked in the past, like right around here, it collapsed. It fell. Like, look, it went up to 118. And then it fell down right over here. It went up again, and then it fell down. And then Disney was kind of, if you look at it, it's been kind of sideways. So just by looking at this right here, I can see that maybe Disney looks a little overvalued right now. But a streaming service can make a lot of money, especially if they take all the customers from Netflix and Netflix goes out of business. Then this would be an undervalued company, essentially. Now, when we look at the volume, we got a pretty decent volume at 5 million. It's a good volume, but it's not as high as its average volume at 9 million. So for some reason, there's not as much trading going on. Now, when you look at the 52-week low, we're actually down all the way to $97 at the 52-week low. Right now, we're actually at the 52-week high. That's why we could see the 52-week high is at $132. We're pretty close to that. So we look at the market cap close to 200 billion. So Disney definitely has a lot of money. We look at the PE ratio, looking healthy. Dividend, looking great. Now, see, when we look at the news, we can see that mostly what they're going to be talking about when it comes to Disney is Disney's streaming service. That's essentially the main news as of lately. When we look at the analysts are talking about how Disney, 27 analysts, among the 27 analyst ratings, 78% are saying it's a buy. 78%. We look at the whole, 22%. 0% are saying it's a sell. So none of them are saying that it's a sell, essentially. When we look at the Morningstar, the buy rating, we can see that they're saying that the parks and resort segment has rebounded strongly from the recession, and the opening of Disneyland Shanghai should provide additional momentum. Although making movies is a hit or miss business, Disney's large library of content with popular franchises and characters reduces this volatility over time. The addition of the Star Wars franchise broadens the demographics that the company can address. Additionally, Disney's strong distribution and merchandising capabilities should help to speed the monetization of the Lucasfilm acquisition. So that's good news. Now, what did the haters from Morningstar have to say? The haters are saying that increases in the cost of popular programming such as sports events and television series could adversely affect margins at ESPN and ABC. The business model for the media networks depends on the continued growth of the retransmission and reverse compensation fees. Any slowdown in the growth of these fees, perhaps because the paid television business begins to shrink, would hurt the profitability of the segment. Developing mass market hit programs can be unpredictable, especially as the media fragmentation continues. Now, when we look at the Morningstar report, we can actually see they're saying that the aggressive Disney launch should serve Disney well over the long run. Morningstar gives Disney 3 stars out of 5. This was only 4 days ago. Now, when we look at the economic wide, Disney has a wide variety of merchandise and products and services, and Disney just has a lot to offer as a company. The fair value, they at Morningstar, they think the price is actually kind of where it's at right now. So if you want to believe in Morningstar's price target, I would just sell it at 130. Whenever it falls below 130, buy. Whenever it goes to 130, sell. So that's essentially what we're talking about. Their uncertainty is medium, and their stewardship is standard. Now, if you want me to read the full report, leave a comment below and smash that subscribe button and let me know. Hit that like button. Now, when we go to the earnings per share, we can see that Disney's earnings per share has been quite sideways as of right now. And Disney is a low volatile company. So this is good news. And there you guys have it. So make sure you guys smash that subscribe button. Hit that like button, and thank you guys for subscribing and sharing and liking and all that good stuff. Thanks for watching, guys. The CEO, Robert A. Iger from Burbank, California, the company was founded in 1923 and employs 201,000 people. That's a lot of people. We already know what Disney is all about. Disney is a diversified international family entertainment and media enterprise that operates through the following segments: media networks, parks and resorts, studio entertainment and consumer products, and interactive media. The media network segment includes cable and broadcast television networks, television production and distribution operations, domestic television stations, radio networks and stations. The Parks and Resort segment owns and operates the Walt Disney World Resorts in Florida, the Disneyland Resort in California, Aulani, and Disney Resort and Spa in Hawaii, the Disney Vacation Club, the Disney Cruise Line, and the Adventures by Disney. So they seem to have a lot of places. The Studio Entertainment segment produces and acquires live action and animated motion pictures, direct-to-video content, musical renderings, and live stage plays. This segment distributes films particularly under the Walt Disney Pictures, Pixar, Marvel, Lucasfilm, and Touchstone banners. The Consumer Products and Interactive Media segment licenses the company's trade names, the characters and visions and literary properties to various manufacturers, game developers, publishers, and retailers throughout the world. It also develops and publishes games primarily for mobile platforms and books, magazines, and the comic books. This segment distributes branded merchandise directly through retail, online, and wholesale businesses. The Walt Disney was founded by Walter Elias Disney on October 16, 1923, and is headquartered in Burbank, California. The federal-listed name for Disney is the Walt Disney Company. And there you guys have it. Smash that subscribe button, hit that like button, and let me know what you guys think about Disney in the comments. Thank you guys for watching. Be fearful when others are greedy, and be greedy when others are fearful, by billionaire Warren Buffett. And essentially what this means is when traders are greedy, they'll keep on buying and buying and buying and driving the price up and thinking that it's going to keep on going up and up and up. But eventually what ends up happening is the stock ends up tumbling back down to earth from the moon because of greed. And people, that's how people lose a lot of money. And when Warren Buffett says be greedy when others are fearful, what he means is that when others are fearful because the stock plummets and everyone starts selling their stocks at a discount, that's the time you want to start buying companies. That's the right time to buy. But usually people start selling. People call it a crash, and that word crash scares people. Really? Let's change the definition. Instead of crash, let's call it a discount. That's essentially what it is. A discount. That's really what it's all about. So as we can see, the Fear and Greed Index by CNN, what emotion is driving the market right now? What emotion? Right now, the greed is driving the market right now. And the reason for that is, as we can see, the McKellen Volume Summarization Index measures advancing and declining volume on the New York Stock Exchange. During the last month, approximately 8.23% more of each day's volume has traded in advancing issues than in declining issues, pushing this indicator forward the upper end of its range for the last 2 years. And as we can see, the stock price strength, that was the breadth. With the stock price strength, the number of stocks hitting 52 weeks highs exceeds the number of hitting lows and is at the upper end of its range, indicating extreme greed. As we can see, that's why the market kept going back up and up. As we can see, it's in the greed territory. As we can look at the safe haven demand, the difference in 20-day stock and bond returns, stock have outperformed bonds by 2.92 percentage points during the last 20 trading days. This is close to the strongest performance of stocks relative to bonds in the past 2 years, and indicates investors and rotating with stocks from the relative safety of bonds. And when we look at the put and call options, the CBOE 5-day average, the put-call ratio during the last 5 trading days, volume and put options has lagged volume in call options by 36.82% as investors make bullish bets in their portfolios. However, this is among the lowest levels of put buying seen during the last 2 years, indicating greed on the part of investors. And when we look at the market volatility, the VIX and its 50-day moving average, the CBOE volatility index is at 15.72. This is neutral reading and indicates the market risks appears low. And when we look at the junk bond market, the yield spread between junk bonds versus investment grades, investors in low quality junk bonds are accepting 1.74 percentage points in additional yield over safer investment grade corporate bonds. This spread is much higher than what has been typical during the last 2 years and indicates that investors are highly risk averse. When we look at the market momentum, the S&P 500 and its 125-day moving average, the S&P 500 is 1.04% below its 125-day moving average. During the last 2 years, the S&P 500 has typically been above this average. So rapidly declines like this indicate extreme levels of fear. So as we can see, the greed index right here, the greed over time, we are hitting the peaks. We are heading towards the peak greed moments. However, that being said, we still have more greed to go. So if you're heavily invested, this might be the time to get prepared for a downfall. As we can see, that way when you have cash at hand during times of extreme greed, extreme fear, you can buy stocks and from your companies at discounts. When we look at VictorVest Stock Advisory says that in the short term, the market is mildly bullish. VictorVest advocates buying safe, undervalued stocks that are rising in price at this time. Second goal is to turn my 100 million into 100 billion. Like this video, leave a comment on the company or stock that you want me to analyze. I go over graphs, charts, news, quotes, forecasting, prices, rating, and reviews. My job is to help you pick the best companies and stocks to invest in so you can become a multi-millionaire. That's multi-millionaire like me. Subscribe so you can become a millionaire and share this video to help your friend become a millionaire too. Don't miss out. Stay on top of your game and ahead of the curve. The world is your oyster. Make hay while the sun is shining. Everyone is subscribing to my channel, so subscribe so you can stay ahead of the curve, so you can come to my show, so you can flow. Comment down below so we both can grow. Like and share this video so everyone can know how to make millions of dough. Subscribe so we both can thrive. Join the millionaire tribe. Watch this video until the end to win the grand prize. It's show. Turn my 100 million into 100 billion. Like this video, leave a comment on the company or stock that you want me to analyze. I go over graphs, charts, news, quotes, forecasting, prices, rating, and reviews. My job is to help you pick the best companies and stocks to invest in so you can become a multi-millionaire. That's multi-millionaire like me. Subscribe so you can become a millionaire and share this video to help your friend become a millionaire too. Don't miss out. Stay on top of your game and ahead of the curve. The world is your oyster. Make hay while the sun is shining. Everyone is subscribing to my channel, so subscribe so you can stay ahead of the curve, so you can come to my show, so you can flow. Comment down below so we both can grow. Like and share this video so everyone can know how to make millions of dough. Subscribe so we both can thrive. Join the millionaire. My link below for a chance to win $1,000 on my Webull account. And if you want a chance to win $25, make sure you download the app using my link in the description below. Subscribe to my channel so I can go over more news, more companies, and more stocks. I'll cover the earnings per share, the charts, the trends, the ratings, the news, the Sortino ratio and Sharpe ratio, market correlation, PE ratio, cash flow, balance statements, net assets and liabilities, and many more. Just for watching this video, I'm going to give you the chance of winning the grand prize. For your chance to win, subscribe to this channel and comment down below, future millionaire. That's what you want to write in the comments below. Write future millionaire. For every social media website you share this video, it will increase your chance of winning the grand prize. Share this video on Twitter, Instagram, Facebook, Snapchat, to all your social media accounts to increase your chance of winning the grand prize. Congratulations. Don't forget to